So now let's get into the meat and potatoes of the merchant processing and payment processing as an industry and what we're going to be providing to the clients. Now, at the bare minimum, let's just go over what it is, right? So every time a customer swipes a card at a business, there is a percentage of that transaction that is charged for the payment being processed, right? Now, this fee is going to vary. Interestingly enough, it actually varies per card. So at Visa, MasterCard, Amex, and Discover, they all have different rates based on the type of card being issued by the bank. And the bank has hundreds of cards being issued. There's over 500 different individual fees being assessed based on the card that is being used at the point of sale. Now, there are certain categories that cards can fall into based on the amount of fees being charged. But at the basic understanding, every single card has a certain fee that's assessed from Visa, MasterCard, Amex, Discover. You also have the banks making a small amount per transaction as well. And then the merchant processing company, as a third one in that equation, also takes a small percentage as well. Now, that entire rate is built into the percentage that is the floor being offered for the actual card processing services. Now, what gets built on top of that, which is how you get to 3, sometimes 4% in fees, is the margin that the payment processing company is actually adding onto it. So these companies like Stripe or Square and these other consumer-focused brands, they're taking a higher percentage of the total fee because they're profiting massively, giving a 3.5 or 4% overall fee to a business to process that transaction. Now, what we're doing is when we're lowering those transactions, there's still margin built in there for us. So we're going to be making a percentage of every single swipe, tap, keyed-in transaction for that business. Now, when I made this direct partnership with this merchant services provider, there's a couple of things that they absolutely excel at. Well, number one, they're one of the largest in the industry. The company's been around for more than 20 years. They have the best rates in the industry. They have so many different relationships in the industry. So like literally we covered every single product that can possibly be offered, from the point of sale system to like all the back end processes and everything. So everything is just set up perfectly for us to succeed. We have the best online and offline tech. There's never been a data breach. So data breach happens when there's the customer's card information being transmitted from one system to another, and this company's never had a data breach. There's also no middlemen in this transaction because typically there would be an agent as part of a company. That company works under an umbrella, which eventually makes its way up to the actual merchant services provider. There's a lot of people in there making a percentage of the business. In my case, that's not the case. There's no middleman in between me and the actual merchant services provider. The fee that we actually get as that base rate is literally the lowest. So we have, number one, the highest commission, but number two, can offer the lowest rates to the business owners who are processing with us. The other thing is that we can take on any risk. So whether it's a low risk or a high risk business, we can take them on. So let's go over low risk. Most e-commerce stores and people doing online businesses can fall into that low risk category. But also think of things like coffee shops, nail salons, hair salons, grocery stores, restaurants, direct consumer businesses. Like think of the gardener, think of dog walking business in your town, or a groomer, right? All of these businesses are processing payments, and those are many times seen as lower risk accounts. Now, high risk or hard to bank accounts would be something like coaches and consultants. Stripe, June of 2024, actually came out and said, hey, we're not allowing any coaches or consultants to be on our platform. Now, what's interesting about Stripe is that when you come on board with them to process payments, they don't really do any underwriting process. It's basically, if you've got a pulse, then you can start processing payments with Stripe. The benefit is it's very quick for businesses to do. It also has a very beautifully built out dashboard, and it's one of the most popular ones that are used. But the trade-off of that is, number one, they are holding your funds for much longer than they should. Their processing fees are extremely high at 3.5% and sometimes up to 4%. And they can literally send you an email and say, we're shutting your business down in 2 weeks, so figure out another solution. Now, those aren't very conducive ways to be doing business, because if you don't have the back end process to be able to do your payments, then your entire business shuts down, right? Like people can't transact with you. Dispensaries, people who are selling CBD or even selling cannabis. We have clients right now who are using a cashless ATM system that are actually processing debit cards in their dispensaries that are actually taking payments now, rather than somebody going to a physical ATM, having a massive fee for that, having an additional step in that experience. Rather, people are coming right into the dispensary, tapping, swiping, or chipping in their card, and then the fees lower for the consumer. It's a more seamless process for the business. And then there's also great tech there as well, where there's like a kind of automatic tipping built in. Anybody who's in the dispensary business, I'd love to have a conversation because we have some really great tech built out for that. Other high-risk businesses are like credit repair, dating, gambling, anything in the adult industry. These are all businesses that are also a bit harder to bank as well. Through my relationship, we also have banking solutions as well. This will be something that for particularly these high-risk merchant accounts, we'll discuss with them also, because in addition to making sure you can receive payments into your business, you want to make sure you actually have a bank account to put those into. And a lot of times people who are in these industries are finding a lot of turnover because there'll be banking issues for one reason or another, and we can solve that problem for them as well. We can lower rates. Number one, I'm guaranteed to lower any rate because we have the lowest rate in the industry. So no matter what somebody has right now, we can always lower it. Now, they may have a really great rate, so the amount that we can reduce it by isn't going to be as much as maybe another client, but we can always save them something. Now, the flip side is we can also reduce that rate to zero. When we reduce that rate to zero, there's two ways. One way is a cash discount program. Another way is doing a surcharge program. Now, cash discount is available for a retail location. That basically what we do is we increase the price for the location in that store by sometimes 4%, for example. Where if somebody swipes their card, rather than the business being charged for that transaction, the customer actually pays for that transaction. Now, is this going to be a friction at the checkout counter? We don't really see it as one. All the merchants that jump on this particular account, once they kind of get past those first 2 weeks of that, like kind of like nervousness of every time a customer comes up to the counter and sees like a little bit of a higher price, maybe it's a repeat customer, they're familiar with what those items cost. It's really not that big of a deal though. So think about it like this. If you go into a business and you spend $20, right? You spend $20 on purchasing, let's say it's a restaurant, right? You grab a burger, $20. Well, for you to pay a 4% fee at that business as a consumer, you're paying an extra 80 cents for that transaction, less than $1. Now for the business owner though, they've got 500 people coming into their restaurant that day who they're covering that fee for. So for a restaurant who's processing, let's say, $500,000 a month in card payments, by paying 4% fee, 4% by 500,000, they're paying $20,000 a month in card fees. Can you imagine $20,000 a month going back into your business? Now, yes, the result of that is the customer now pays that bill if we decide to lower it to zero. But even if we cut that rate down, where rather than paying $20,000 a month, they're paying $15,000 a month, or they're paying $14,000 a month, right? Like that's a massive savings for that business. Restaurants notoriously have a very low margin because of food costs and employee costs and just rent in general, all these things. So you put $20,000 more into a restaurant a month, and you're going to see like massive change in that business. Even if the business owner decides, hey, I want to raise, like I'm just going to pay myself this entire difference every month, that's great. You're going to build a very, very good relationship with that person. With cash discount, the benefit of that is the register, it'll show the price of the product. So in the example where you bought something for $20, today it's $20, tomorrow it's $20.80 because we're not doing cash discount. If that person is paying in cash, well, there's a discount for cash. The discount for cash is that 4%. So rather than it being $20.80 for a card, it's now just $20 for that cash transaction. Now, how many people use cash in a business? It is, of course, lower today than it was 20 years ago. A business may only have 5, maybe up to 10% of transactions, but usually it's a bit lower. But either way, there's never any transaction fees on a cash transaction because there's no company in the middle of that transaction. It's I have money, cash, now goes to the business. But when it's a card, there's something that is actually back end happening there, right? Now, a virtual business or somebody taking payments online, there's no potential of cash there, so cash discount doesn't work. In this case, it'd be a surcharge program if we do a 0%. So in that case, the fee at checkout, let's say somebody's buying a product for, again, $20. The surcharge on that would be the 4%. They're now paying extra 80 cents per transaction. And then the business owner now saves the money on that. Let's look at somebody who's maybe in contract right now. One thing that a lot of these companies will do, we don't do it because we don't need to, is they'll say, hey, process with us. We'll lock in your rate for the next year or the next 3 years, 5 years, right? But we'll lower your rate. So let's say a business right now is paying 4%. A company may come in and say, hey, we'll give you a 2.75%. We'll save you 1.25%, which is nearly 30% of what you're paying right now. Caveat is sign an agreement with us. You can't switch within the next 3 years. Well, for us, we'll buy them out of that contract. Obviously, it'll have to make sense where we're still making a margin to be able to overcome that buyout. But I bought people out of contracts many, many times. It's a really straightforward process. It's really not that big of a deal. Sometimes if a business owner is very kind of apprehensive, to maybe making a switch, that could be one of the reasons why. Another reason could be, somebody just recently switched. But again, like we have so much value built into our product that there's still reason enough for somebody, to make the switch over to us. Whether it's getting better support, getting a better product, getting faster payouts, having a lower fee. Of course, we may think, hey, the lowest hanging fruit is put more money into your business. But I've spoken to merchants where, I could have kept their fee the same, but given them better support and better technology, and that was enough reason for them to switch, where the money aspect didn't even matter. Well, of course, I made it a completely no-brainer because I don't want maybe a competitor who can offer, same or similar service, and now somebody's getting the best tech, and now somebody comes in maybe a year later and says, hey, I can keep that same tech, but now I can lower the rate. I just wrapped everything into one. Best rate, best tech, best support, everything all in one. So I know that the stickiness of my offer, the chances of that person leaving processing payments with me and going to somebody else is significantly reduced. So I like to make a completely win-win situation where it's an absolutely no-brainer for the business to switch over, but also keep them on board with us. So again, these are just a quick overview of kind of what some of these niches look like, kind of how the business is structured, how it works, and then how we actually make money in that equation.